That's the good news. Now, though, to market watcher Harry Dent, author of the book Demographic Cliff. All right, Harry, we know you're a bear. 2016, I couldn't think of a better debut for any of the bears out there. Has it followed the script, though, that you thought it would sort of follow?
Yes, it has. We've been warning that in the last year, especially on this show, that the market looked like it was topping. This is not a normal correction coming. It's another crash greater than 2008. Every crash we've had after every bubble has been bigger. We've been looking for the small caps to greatly underperform, and they're doing that in spades now. That's the classic sign of a major top. The market's done very poorly in January and December, which are almost always the best months of the year. That's another sign of weakness, but we've most been warning people, watch oil. Central banks can control the economies in lots of ways, but they can't stop oil from bursting because it's coming from a global slowdown. And most importantly, look at China. China had a crash just like 1929, down 42% in just 2.5 months, and then the government steps in, like the U.S. government did in 1929, buys its own stock market with zillions of dollars and tries to stop the bubble from bursting, and 4 months later, bam. We're getting very close to that point. So China's following the same thing happened in 1929. I think within the next month or so, you're going to see China crash stronger, and the whole world's going to follow. It's just going to be a trigger.
Okay.
But that's all we need in a world that now is $57 trillion more in debt than it was in 2007.
What's the course?
All we need is a trigger like the subprime crisis.
Okay, you started off talking about bubbles. What's the course of action? And what did you do in 2006? You got people prepared back then. What do they do now if they follow you and believe that this is it? The crash is finally here.
Well, the biggest thing is we've seen bubbles across the board, globally, real estate, commodities. The commodity bubbles already burst 70%. We're looking for 80, so that's largely happened. But you get out of all financial assets. You sell real estate that's not strategic to your life or business. You get out of stocks. Now, some people can short the market. That's much more tricky. I'd rather people sleep at night. The key is just to get out of the way of the bubbles. Bubbles burst faster than they build, and they only burst big time once in a lifetime. So people don't see it coming. And I tell you, 9 out of 10 people I debate will say all day this is not a bubble because of this, that, and that. I'm like, it looks like a bubble, quacks like a bubble. It is a bubble, and I've got a zillion charts to show that. This is a bubble. You have to simply get out of the way of it. Once it crashes, and I'm saying the Dow could be below 6,000 in a year and a half. Once it crashes, then you have incredible investment opportunities.
Harry Dent, all right, thanks a lot. We appreciate it. Thank you very much. All right, I want to get back.